Yeah, we appreciate it. I would love to start off, man, if you don't mind, just a little background, a little intro, kind of get things going here. I'd be appreciated.
Yeah, so background. So I've worked in financial services for 20 years, and had stops along the way, a lot in the credit ecosystem. So I worked at FICO for a while, the credit scoring company, got to see how that works up close. Worked as an analyst, sort of covering the market, particularly looking at the credit card space and how
Mhm.
that intersected with sort of early fintech innovations. Like you guys remember when P2P lending was a big deal and Lending Club and Prosper, those days. And then at a small startup where I got my start in Bozeman, Montana, which just happened to do credit decisioning and loan origination and worked with a lot of the banks to enable that well before fintech was a term. So been in and around fintech and banking for 20 years with a focus on lending, and then about 5 years ago started writing fintech takes, and have really enjoyed the experience of being able to sort of comment on the industry and learn all the different parts of it.
You were fintech before fintech was cool.
I like to say I was fintech before that was a term people used. So yes, that it's been a while, but it's been a wild ride.
I remember the first time sitting in a small startup and having a debate with the board over what is a fintech and are we a fintech, right? And that was, 15 years ago, right? It's pretty cool to look
Yeah,
back.
it's
Yeah,
worth quite a bit.
I want to hit you with one, man, if you don't mind, kind of a
sure.
toughie and a big one. Me
Yeah.
and Dad have had this conversation exactly, and it is a moving target, like you mentioned. For years, we've talked about this, and it's sort of this abrasive relationship between banks and fintech. And I know
Yeah.
that term, we could call that 50 different things, right? Whether that's
Hmm.
bank or FI driven fintech, right? Whether that was back in the marketplace and challenger days, right? And today
Yep.
it's a lot more like partnership. And
Hmm.
the idea of if you look at very traditional community banks and
Hmm.
smaller institutions, obviously M&A trying to kind of compete with the new world. And then you look
Hmm.
at, all the folks that we all know that are more participating and partnering and sponsoring, et cetera, in that world, right? Just what do you make
Hmm.
of the whole ball of wax and a lot of the, I don't know, the cultural changes that have gone, and it feels like things are getting closer to the middle, but what do you see? What do you think?
Yeah, no, it's a great question. I mean, I'm going to use an analogy because I do that a lot in my writing and in my podcasting. And forgive me if this is kind of a silly analogy, but it reminds me a lot of when you get a little bit older and you're sort of become an adult and you realize that your parents actually kind of knew what they were talking about. And a lot of the things that didn't make sense to you or that pissed you off when you were younger actually make a lot of sense. And then you sort of wake up like another 5, 10 years down the road and you realize you're doing the exact things that your parents were doing that you said you would never do. And the evolution of fintech
I love
reminds
that.
me a lot of that, right? Where it's like, 10 to 15 years ago, it was a very sort of rebellious industry, which is like teenagers, like the way everything that you do is stupid. You have no idea what you're talking about. We're going to come in and eat your lunch. I don't need you. Like, this is like, we're going to like totally refashion the way the industry works. And then they tried. And what they found, I think, was that it's really hard to make money in financial services. It's really hard to cross sell once you have one good product and you try to build a larger brand and expand into multiple products. Cross sell is really hard. Maybe, you can almost sort of, and I'm not in any way excusing this behavior, but you can almost sort of squint and understand why Wells Fargo was under so much pressure to like sell more products to their customers. Like, you would never want to do that, but like you start to get a sense of like, God, cross sell is like really hard. Why won't they take these other products? And so I think there's just been a lot of things that fintech has learned through experience that bankers have known for a long time. And because of that maturation process, which you can only learn through experience, right? You can't ever understand your parents until you become older and you experience life the way that they did. But once you have those experiences, you start to appreciate the other person's perspective. And I think where we are now, as you characterized it with like partnerships, I think partnerships only work when each party has more respect for the other party, right? And can empathize with where they're coming from and can understand their point of view. And, 10 to 15 years ago, that mutual respect and empathy just didn't exist. Today, I think it does, partially because fintechs have matured and have gone through a lot of those learnings. But then the other thing, and just to be totally candid, is I also think older generations oftentimes forget what it's like to be young, or who don't appreciate sort of the value of youth. And so a lot of times, and I hear this all the time, people saying like, "Oh, that thing those kids are doing will never work." And maybe part of that's true, but then also there's a perspective of like sort of cynicism or like weariness with the world. Like, yeah, like I've seen this before. I don't want to have any interest in that. And then son of a gun, they try something that maybe others have tried in the past, but this time it worked. Wow, amazing, And like, you can't look at fintech and say they haven't innovated or that they haven't moved the industry forward, because they clearly have. And there are things that I think banks have learned from and have benefited from that have come from fintech. And so, again, 10, 15 years ago, I think banks were pretty dismissive of fintech for the most part. There were a few exceptions. And I think today, banks and credit unions are much more open to the idea that fintechs might be better at some things than banks. They might know things that banks don't know. They might have just a sort of optimism about what could change that banks could benefit from. And so I think as both sides have matured in that way, they sort of met in the middle. And it's kind of that sweet spot where you're old enough to have a different relationship with your parents no longer see you as a kid, and both of you can have like a really productive and enjoyable relationship. And I feel like that's the era we're in now.
Well, I would say we're almost in that era. But
I hope so, yeah.
on the other side of that, man, you've got some bankers that really screwed this up. That, and the question hits me all the time. People, do you think they knew better? I'm like, you're damn right they knew better. I know for a fact they knew better because I told them. So
Yep.
I know they knew better. At the same time, a few banks letting, let's just say that cows out of the barn, right? Horses out of the barn.
Sure. Sure.
Made such a mistake at grandiose scale that A, everybody could see it coming and didn't want to do anything about it. But B, you set the regulators loose. I mean, like a flock of F-16s onto a battlefield. It just
Yeah.
really, you've got a lot of people right now. So what we talk about with people is that you'll notice, number of banks going lower and lower, and you see dollars just going bigger and bigger and bigger. So where
Mm-hmm.
the hell are those dollars going, and how do banks participate in that? And that's really what this discussion is.
Mm-hmm.
We've got to change banking to a certain degree,
Mm-hmm.
but still make it safe along the way. And so the innovation piece of that's a lot of times is cutting edge, bleeding edge, and mistakes
Mm-hmm.
are made. And then
Mm-hmm.
there's the dipshits that they weren't just mistakes; they were monumental mistakes. Okay,
Mm-hmm.
now when that becomes the narrative, that creates a whole set of problems of its own, right? And so you
Mm-hmm.
get this reluctance to participate, which is
I
what
think
if
that's
I had a pet peeve these days, it would be that
Mm.
this reluctance to participate. Yet
that's
I
a
Mm-hmm.
say that as more and more people are participating every day. So I think it's a good thing that people are getting there. And to your point, we're getting there.
Mm-hmm.
Yeah. There's a lot to
there's
be
a
offered on both sides.
there's a huge bottleneck, right, Alex? I mean,
Mm.
I can't
Yeah.
tell you how many phone calls I get of programs and fintechs that are like, wow, they've been
Yeah.
dropped by a sponsor, they had a problem, they're looking for another sponsor, right? There's just a massive bottleneck in the
Good.
need
Yeah.
for sponsors. And a lot of these, I don't even think really fit the traditional sponsor model that we've all seen. I mean, to your point,
Mm-hmm.
these are very mature, sometimes far safer programs than to bank a traditional relationship, right? And they're
Yeah.
still
Yeah.
not getting the bank relationships they need. So, what do you think about that?
Yeah. Yeah, no, I mean, I see the exact same thing, right? Whenever I talk to sponsor banks that are open for business, right? Like we'll take new programs, we're not under a consent order, like we're trying to grow. Whenever they're like at an industry event, those people are always like hiding behind ferns, trying to like not be seen because everyone is trying to chase them down because there's such a mismatch between supply and demand. And, Dave, to your point, a lot of it results from an overreaction that was a very natural and should have been expected overreaction on the regulatory side to all the nonsense that was happening before, right? And so I think the thing I notice about this space just generally is there is a minimum level of competence and compliance and responsibility that you have to play in this space. And that applies to banks and it applies to fintech companies. And if you don't meet that threshold, we need to be very disciplined about keeping you out of this space. And when I say we, I mean everyone, right? Banks need to be disciplined about it. Fintech companies need to be disciplined about it. VC investors that invest in fintech companies need to be serious about it. And I think that's a group that maybe doesn't get as much criticism as they deserve at times. And then regulators need to be serious about it, right? And one of the critiques I have about regulators around this problem is they weren't proactive in trying to shape the way the space was evolving, right? And evolving being a very obvious pun here. Like there were bad actors that were doing bad things here for a while, and it was kind of an open secret in the industry. And you have to stop that kind of thing from happening before there are cyber attacks or before there are bankruptcies that freeze customers' access to funds. Because when those things happen, then it becomes an issue for Congress. It becomes an issue that makes its way into the mainstream press. And then there's just going to be an overreaction. And, Tanner, to go back to what you were saying, the problem we're at now is that overreaction, the backlash to it is, oh, I don't want to touch this, right? Like, and there are banks that absolutely should be involved in banking as a service, who should be partnering with fintech companies who won't, not because it doesn't make business sense or because they don't have the capabilities to do it well, but because they're just nervous, right? And banks are risk management animals at the end of the day. Like they don't do things that don't feel good from a risk perspective. And so, I do think, again, talking about like we're almost at the precipice of a new era, the thing I'm cautiously optimistic about is I think with the new administration and with different folks at the helm at the regulatory agencies,
Yep.
I don't know that the actual rules will change that much, right? Like one of the rules that came out that was proposed after Synapse melted down is the so-called Synapse rule around like ledgering and maintaining records of accounts. Everyone should be doing that, right? Like that's a very just common sense rule that quite frankly, it's one of those ones where it's like if I have to say this is a rule, I'm a little concerned that there are people who weren't doing it before, but like it's a common sense rule. I don't think it's going anywhere under the new administration. Like everyone is pretty supportive of it generally, but the message that's going to get sent from the regulatory agencies over the next 4 years, not the rules, but the message, the like language they use, the way they communicate to the market is going to be much more pro innovation. And it's going to be much more like, hey, even though we have high expectations for what you're going to do here and we don't are not going to have any tolerance for you screwing it up, we want you to do this. We think this is a good thing for the market. We want you to partner with fintech companies. We want banking as a service to be a viable space. And I think that's going to sort of unfreeze things a little bit because, Tanner, to your point, I know so many great fintech programs, earlier stage, later stage, some that got thrown off by a sponsor bank that was in trouble, some that are looking for their first sponsor bank that are amazing programs where I want to see those products in market helping small business owners and consumers, and they can't find a bank partner right now, right? Like that's the next problem we have to solve.
Let me hit you with one. I've gone a couple deep here. Let me have just one more step in this chain, and it's
Sure.
what I would call brands,
Mm-hmm.
lack of a better term. It's the, maybe Walmart is a little too well known of an analogy. It's the Home Depots, it's Olive Garden, it's the gas station, the grocery store, etc. I
Mm-hmm.
think what a lot of us missed in our fintech focus, right?
Mm-hmm.
That the brands weren't asleep at the wheel. They
Mm-hmm.
watched opportunities. They've learned. A lot of them have picked up talent from all these sides of the fence, right? And so I think the first time, a number of years ago when I asked the question of is Uber a fintech, right? I think that's kind of
Mm-hmm.
that precipice moment of the brands are all, let's just say that's the Fortune 500, right? They all want to do
Mm-hmm.
things, are doing things. And I
Mm-hmm.
think that is very much traditional commercial banking, right?
Mm-hmm.
Now
Oh
all
yeah.
the they want to issue a card as a
Mm-hmm.
silly example, right? All the things that all of a sudden fall back under BaaS and that landscape. And so you've kind of got two crowds competing,
Mm-hmm.
sponsors, so to speak. And I think it's very much say a next evolution of commercial banking. And I'm afraid
Mm-hmm.
we're leaving that group behind as well. And I mean, you talk about super safe opportunities that are things you're probably banking today. Am I,
Yeah.
does this make sense too? You see that, Margaret?
It makes complete sense. Yeah. I mean, I think a very natural question that I would ask if I was a community bank executive, and that I don't think many of them are asking, is how many of our commercial clients that we bank, we provide banking, treasury management, lending, whatever the services are that we do for them, payroll, how many of those commercial clients are or should be offering some form of banking product to their end customers?
Yep.
And of the percentage of those that are or should, how many of those should be done through us? Because we already have a relationship with them. We've underwritten them as an entity from a risk perspective. We're comfortable with that. And it's really just an extension of our bank further into those commercial relationships. And I think the answer would be huge, right? Like another sort of obvious, like low hanging fruit that sits on the table is I was talking to a large commercial bank, and they do a lot of commercial lending, but they also do quite a bit of like commercial banking and kind of commercial deposits. And I was like, hey, so I was talking to the commercial lending folks, and I was like, do you happen to know what percentage of your commercial lending customers also have commercial bank accounts with the bank? And they were like, no, we don't know the answer to that. And I was like, oh my God, like how can you not know the answer to that? Like you need to know the answer to that question. And they went back and they found out, and it turns out it was 40%, right? So even something simple like, hey, if we're lending to these entities, maybe we should look at the cash flow data on the deposit accounts that we already have because we're their bank and use that data to help us underwrite them from a lending perspective. Like there are so many untapped depths around the relationships in the business that community banks already have. And that can mean crossing over from deposits to lending. It can mean crossing over from commercial to consumer, or it can mean, Tanner, to your point, going further into commercial from direct banking to embedded banking. But there's all these different dimensions that you can push further in. And I think the only thing that's constraining community banks from doing that is their curiosity and their willingness to like kind of push into new areas to try new things. And I think that's where fintech provides a lot of value because they provide sort of a template for what that can look like. And every smart community bank CEO should be asking, how can we take what fintechs are doing and apply that to our business?
You mentioned direct, and it grabbed me because I've always thought fintechs, brands, commercial clients, whatever you want to call them, I've always thought them as resellers.
Yeah, yeah,
That's really what we're
absolutely.
talking about. And it's kind of crazy to think that we would sit in a age-old business that
Yeah.
is recently opened up to resellers and say, no, we're just going to sell direct. We're not going to partner with resellers. It's
Well, and
crazy
here's
what the
another
future
example,
is
right?
here.
Like you have commercial customers who, like in a lot of cases, are like retailers, right? Who are selling to consumers. They exist in the community that you serve. Well, fintech comes along and says, "Hey, buy now, pay later is pretty cool because we can, through these merchants, extend credit on a transactional basis to consumers that shop with those businesses." There is no reason why every community bank that sort of operates within a specific geography and that has both consumer and commercial customers couldn't create their own little buy now pay later network between their merchants and their consumers. There's no reason that they couldn't do that. It's just a technology problem and a willingness to sort of explore new models problem. And I think that's where most community banks get stuck. But I couldn't agree more. Like treat all of these things as distribution channels, as beachfronts that you can expand on.
Man,
Love
I
it.
got to tell you something. You're the perfect guy for this too. So we have the fund, the BHB fund. So Bakers Helping Bakers does a ton of shit.
Yeah.
One of the things actually you mentioned a minute ago, we're working right now with another company to set up basically guidelines with the FDIC
Mm-hmm.
and others,
Sure.
something long overdue. And I think the lobbying arms out there that do that today are way more fintech focused and less bank focused. And we're
Sure.
obviously I mean, we're both, but I mean, we're more bank focused than
Yeah. Yeah.
fintech focused, if you were to say it as a blanket statement. So that
Mm-hmm.
said, hey, that needs to be done for sure. But where we get into the cool stuff is this fund. Okay. We're not the
Mm-hmm.
biggest fund in the world. We don't do the greatest things in the world. We literally just invested in a company that does just exactly what you're talking about, where you can do it,
Mm-hmm.
you can change that to a buy now, pay later, or vice versa, and change your
Mm-hmm.
mind. The fact these things are there. And one of the
Mm-hmm.
neatest things that we get to do is sit on this selection committee. And man,
Mm.
I'm telling you, you would love it because you get to sit and listen to these guys, and you got to have a pretty good ear to see the holes in the boat, where this
Mm-hmm.
isn't going to work. Or
Mm-hmm.
a lot of times they may be pitching something when it's like, actually, I don't even think they know what they're sitting on, right? And so
Yeah. Yeah.
it's a really neat thing that I think a guy like you would really enjoy. And luckiest part of my day is to be able to do that once a week. But it's really entertaining and interesting. And and it's also back to what you were saying about being part of the. This is my whole thing, I guess, in life is I'm so sick of a son of a bitch telling me about becoming a dinosaur or what's going to happen.
Mm.
And it's like, can you give us solutions for God's sakes?
Solutions. Yeah.
And this again, back to complimenting you, man, you speak your mind, you throw thoughts out there for people to chew on and go, I don't think I like that, or man, that's a damn good idea. And you've had a bunch of them. But
Well, I
that's
appreciate
what's
that. Yeah.
necessary here. And it's critical that we have thinkers like you that can
Mhm.
actually see a big, broad bunch of information and filter through that and pick and choose things to say, this actually makes sense. And this is a way to do it correctly rather than just complain about shit all the time.
I totally agree. Yeah, I mean, I think the thing I always try to come back to is solutions, like you're saying, right? Anyone who says community banks are screwed and that's the only thing that is true, that's just bullshit, right? Like that is not true. That doesn't have to be true. There's no reason why community banks can't thrive in this next era. Are there going to be fewer than there were 10 years ago? For sure. That's just sort of an inevitable evolution of the market. But I think there are all kinds of opportunities for community banks to attack. I'll tell you another story just to sort of illustrate the creative thinking around this stuff, right? I was
Go, man.
talking
I
to
love your story. I love
this
them.
is a good one. This is a good one. So, this was a community financial institution where a big part of the customers that they serve are the airline industry, right? So, like pilots, mechanics, stewardesses, all those kinds of things. And we were talking about this idea that's been expressed in fintech, which is that it's a lot easier to build differentiated products that can win in a digital environment, right? Because in digital, there are no like moats that exist from a distribution perspective, right? Anyone can get to any customer at any time, right? So you're not, the moats that used to protect you as a business don't exist anymore. So how do you adapt in that environment? Well, you build products that only you can build for a segment of customers that you know better than anyone else, right? And we've seen fintech companies try to pursue this strategy. Sometimes it's worked, sometimes it hasn't, but that strategy I think makes a lot of sense in a digital context. So I was talking to this institution about how they do that, and I was like, so for your kind of core customer segment, which again is very heavily weighted towards like the airline industry, what's a thing that you know that probably no one else knows or have experience doing that no one else knows how to do? And they kind of thought for a second and they're sort of quiet. And then they came back and they're like, well, there's a particular type of mortgage that you can do that finances the purchase of houses for airline pilots that exist within the perimeter of an airport, right? So there's this very specific kind of housing that
Huh.
only pilots can buy in hub cities at airports so that if you're constantly flying through this place, you can actually have a place that you can stay and it can be your own home. But as you might imagine, that type of property, very difficult to originate a mortgage for, right? Because it doesn't look like a normal house. It has different rules and different covenants and requirements for who's able to buy it. And they're like, yeah, we actually, we're pretty good at originating those mortgages for those types of properties. And they were like, do you think that's a good example of a product you could build like around? And I was like, yes, like that is an amazing idea. Like,
Exactly.
do that. You should have, this institution should have 100% of that market. They should have 100% market share in that space because they know it at a level that they'll have very, very few competitors. And I think that if you're a community FI, the thing I always start with when talking about this stuff is if you're being honest, you've probably over the years gotten a little bit flabby about how you define your core customer segment and how you serve that core customer segment. And I totally get why, right? Like we had these natural monopolies. Oh, we have more branches. We donate more money to the local softball team every year. Like you had these reasons why you were winning. And so you didn't have to like press on that anymore. But just because you've gotten a little flabby doesn't mean you can't get back in really great shape, right? And so the core of doing that is think about who your core customer segment is, what you know about them that no one else knows. And if you do that, you can limit the competitive field that you're playing in to a very small amount. And it might be geographic. It might actually be, hey, we're going to serve this community geographically better than anyone. But it could also be, we're going to serve airline pilots. We're going to serve, new military recruits because a lot of our branches are near military bases that have large intake of new recruits. Like it could be any population, any segment, but there are a million and one opportunities to build better banking products, digital banking products for those segments if you focus on them. But if you try to play by the old rules, that's where fintech and larger banks and non-bank brands that's where they're going to kill you, right? Is if you try to play by the old rules. So adapt your playbook, find your core customer segment, and there's a million opportunities.
I couldn't, I mean, we've done a dozen just like that. And I love it. And here's the thing, too, that's a great message for the community banks. You don't have to stop serving your community, guys. I mean,
Not at
you
all.
can still do what you do every day. What we're talking about here is another avenue. Maybe
Yes,
it's, I mean, it's another street where there's no traffic on it. It's all yours. It's already paved, rock and roll. And we can show you how
that's
to
right.
do all these things. This is what's frustrating, I think, for guys like you and me and Tanner and several others. There's some good guys out there
Hmm.
that know what they're doing, can show you how to do things right. But when all you hear about is the stuff that's wrong and why you shouldn't do it, that's actually a barrier to entry in itself. And that's one of the questions I wanted to hear you talk about is, we talk about people that have a microphone that shouldn't, and I can't think of anybody offhand right now, but it's
Hmm.
getting better. But
Hmm.
I think guys like you are awesome. It's like the fourth compliment. Sorry, I'm not trying to kiss your ass. I'm just trying
No,
to
no, no. I mean, this
appreciate
is
you,
this is
man.
a wonderful way to spend a Friday. No, I appreciate it. I mean, I think you guys are the best. I think the thing I always come back to with that is there's sort of two ways to get attention, right, in all of this stuff. One is just to talk about how terrible everything is, and the other one is to come back with solutions, right? And my view of the space is that no single party has an inherent right to win, right? Fintech doesn't have the right to win. Big banks don't have the right to win. Community banks aren't ordained by God and have a natural right to exist and a right to win, right? No one has a right to win, no matter how old your institution has been. Oh, wow, we go back 120 years and it was founded by this family that moved here at this time. Does not matter. You are starting today. Today is day zero, to borrow an Amazon term. It is day zero right now. You have no right to win. What are you going to do to win? Right. And it's a level playing field. Everyone can play the same game. And so I think that if you have that mindset, it naturally creates a view into solutions. And I couldn't agree more with you, Dave. I mean, the thing that drives me crazy is when people get wrapped around the axle of some negative thing like, oh, this is going to be terrible for community banks or they'll never be able to adapt to this, whatever. You sort of lose before you step on the field because you're already like in that mindset. And I honestly think it starts with the mindset of like day zero, we can win. Where should we go so that we have a good chance of winning and where we can compete effectively? And if you make those decisions right, I'm incredibly optimistic about anyone's ability to compete in this space. It's not over for anyone.
Yeah,
It's such,
Tanner and I and Matthew have all dealt with a lot of boards, and honestly, that's
Yeah,
where I
yeah.
think a lot of the problems are. You'll have, let's say you've got a president or CEO that, and he's energetic and he's got some big ideas, but they actually reach out to us of how do I convince my board to do this? Can you help me? Is there a data case to be made, or is there some way we can
Hmm.
talk to them? And it's like an outdated. I don't want to say outdated or uneducated, so let's use a better word than that. Ineffective. How about that?
Hmm.
That group of people at the boardroom are a legitimate concern for what we're talking about progressing down the road. And I'm not positive how to go about, we give it on a case by case, but I don't know
it's
how
a
the
founder
big
mentality.
message it overshadows the negative message because it's so powerful.
It's a founder mentality of if you've done it from nothing before, I guarantee you I could do it again. And I sit here today and I'm like, I have a heck of a lot more resources to work with than nothing, right? And I've done it before with
Hmm.
it's a good idea. Alex, first off, super thank you, but I do want to give you 1 minute, man. And any final thoughts? What's on your mind?
Yeah, no, I mean, just building off of that last point you guys were making, I mean, I couldn't agree more with you. I think that the thing I always come back to with that is that, it's kind of amazing what you can do even with limited resources, right? And Tanner, you draw a really good comparison or analogy between early stage fintech founders and community bank CEOs and boards, right? You are both at the mercy of having to compete with institutions that are way bigger than you and that have way more money. But some of the coolest innovations that have come out in financial services have come through partnerships between early stage fintech companies with no resources and community banks with no resources, right? And so, like, I never ever want to hear from anyone, oh, this is a resources problem, or we can't throw as much money at this, or we can't hire the right talent. That is just not true, right? Like, we
Great.
know from experience, you can overcome those problems. It requires scrappiness. It requires a willingness to be innovative. Sometimes, I mean, let's be honest, it requires an ability to take on a little more risk or to be a little bit more forward thinking in the way that you deal with certain regulatory issues. Like all of those things are true. I always encourage people in this space to be as outgoing and proactive in working with regulators as possible, because regulators, for the most part, are not anti-innovation. They're just anti-surprise. So don't surprise them. But like, if you can work with them, they're willing to help you figure out paths forward. All of those things are on the table, and it's not a function of resources, right? It's a function of will.
Well said.
Good
Man,
for you.
really appreciate everything you do. Keep up the good work. Thanks for joining us, and we'll look forward to seeing you next time, man.
Thanks for having me.
All right. See you guys.
Everybody.